I think this is really interesting because Michael Saylor is at an interesting point in his Bitcoin experience, right? He's now going through what anyone who's been in this space for, like I've been in it for 11 years, right? Started buying it at $1. I've been through 3 halvings. I've been through 4, maybe 5, 80% corrections. And so Michael is having his first, big, cream pie in the face of volatility everyone experiences with Bitcoin at some point.
About a week ago, in an interview with Bloomberg, popular Bitcoin advocate Michael Saylor made a list of things that would make Bitcoin a stronger and better asset class. He mentions challenges like unregulated crypto exchanges, the vastly unregulated stablecoin industry, and the lack of no-wash trading rule as the issues that are impeding Bitcoin's exponential growth. In an interview with Anthony Pompliano, another Bitcoin advocate and former host of the Keiser report, Max Keiser has reacted to Michael Saylor's list. Keiser describes Saylor as a Bitcoin newbie who was getting his first cream pie of Bitcoin volatility in the face. While he agrees with a few of Saylor's points, Keiser notes that most of Saylor's solutions will open the cryptocurrency industry to unsuitable regulation and completely weaken the decentralized status of the crypto ecosystem. Keiser also speaks about the Bitcoin revolution. He mentions that, unlike in the US, citizens of less developed countries are more readily accepting and appreciative of Bitcoin's rare qualities and are more likely to lead the revolution. We will now take you to Max Keiser's interview. But before we do, please like this video, subscribe to the channel, and drop your comments in the comments section below. Thanks, and enjoy the video. Keiser begins by reacting to the first item on Saylor's list, which is the lack of a no-wash trading rule. Wash trading occurs when a trader or investor buys and sells the same securities multiple times in a short period to deceive other market participants about an asset's price or liquidity. In Saylor's interview, he mentions that wash trading activities in the crypto market allow traders to harvest losses and gains in a way that cannot happen in the traditional equities market. Here is Keiser's response to that and the issue of 20x leverages offered by many crypto trading platforms and exchanges.
The wash sale trading rule, I would give that, I'm fairly ambivalent about that. It's like, yeah, that would be kind of nice, but he's trying to avoid this hyper trading that's going on, people trading without any cost whatsoever into kind of the fastest moving, I'll say shitcoin, I don't know, altcoin. And there's a tremendous amount of social media where you see hyping of a meme coin. And so there's no penalty for that mass of meme coiners out there to just jump into a new one. There's no tax penalty, et cetera. So bringing in a wash sale rule would theoretically put a buffer between that kind of murmurations, as I call it. So I guess it's okay, but you're opening the door to regulation. So that's where I would say put a caution light there. Michael is somewhat of a newbie. It wasn't too long ago when over there at BitMEX, you could get 100x leverage. So 20x leverage is moving toward a more sane environment than 100x. But obviously, again, that kind of leverage is not consistent with the kind of the guardrails that should be in place for the average retail investor. And so having access to that, it's almost guaranteed you're going to get wrecked. It really turns platforms like Coinbase and others, that they become more like casinos. I've called them casinos before, unlicensed casinos. And so it has that element to it where you're really, you're putting up a penny and you're gambling on a 20x or a 30x. And as you know, that type of trading is almost guaranteed a loser. So he's right in terms of that kind of existence of as a casino operations going on. He's correct. Again, it opens the door toward regulators, so that would be the downside. He's correct. Again, it opens the door toward regulators, so that would be the downside.
In his list, Michael Saylor also spoke extensively about the other over 19,000 cryptocurrencies that are often compared to Bitcoin. As a Bitcoin maxi, it is expected that Saylor would have such opinions, especially after we've all witnessed how the Terra collapse affected Bitcoin and the overall crypto market. But how does Max Keiser, another Bitcoin OG, feel about other cryptocurrencies? Let's get back to his interview.
Everything that's not Bitcoin, as I've said on your show before, would come under the heading of either relatively or absolutely centralized versus Bitcoin, which is uniquely decentralized. additionally, a case can be made applying the Howey test that everything that's not Bitcoin would be an unregistered security, right? So, and it also brings about the question about Senator Lummis in her bill that she's trying to get through Congress, talking about applying some regulations to quote unquote crypto. And she does things like she equates Ethereum and Bitcoin. She calls them both commodities, which I think is false. I mean, you can make a case that Bitcoin is a commodity like gold, but clearly Ethereum is an unregistered security without any doubt whatsoever. So Gary Gensler over at the SEC had kind of pushed back against all this and said, hey, lady, stay in your lane. You don't know what you're talking about, which I think is the correct response. But when the cross-collateralization issue that he's getting at is really the crisis du jour, I would say, because of what we saw with Terra, Luna, and all these other DeFi coins, that they're manufacturing that yield, Pomp, from kind of cross-collateralizing and putting money to work into other DeFi coins, and these other DeFi coins are generating returns by creating coins out of thin air. So, I mean, by definition, that's a Ponzi scheme. So a lot of that DeFi return is just cross-collateralizing into new situations that are creating coins out of thin air and rewarding early, coin rewards, et cetera. Again, unregistered securities. So that's definitely an issue. And here, I think that this is definitely a regulatory issue where this definitely would require regulatory enforcement. And you see these things, for example, with Luna, these guys are definitely getting into big trouble. I believe they're completely prevented from leaving South Korea. They're being held by the police. So, this is definitely an issue. So I think with that, he understands that this is what's keeping the lid on Bitcoin at the moment is you've got hundreds of billions of dollars. You've got people like Sam Bankman-Fried over at FTX, who's become a kingmaker by creating these enormous kind of cross-collateralized market-making, unregulated situations where price discovery can't take place. This is something that people talked about a couple of years ago. They said, will Bitcoin experience the same problems gold has? Because there's no good price discovery in gold because of all the derivatives. And so Wall Street can really decide what the price of gold should be, not the market. And what Saylor's pointing out is we're seeing this now in Bitcoin. You've got derivatives or DeFi that are creating price discovery for Bitcoin, and it's blocking it from a more natural price discovery from taking place. So I think he's got an excellent point there, and this is definitely under the wheelhouse of the SEC. They're definitely should be enforcing in this case, and they're being lax, and it's unclear why the SEC is being lax.
In his interview, Saylor stated that the issue of the thousands of unregulated crypto tokens is worsened by wildcat banks which enable gamified practices offering unsustainable yield, such as what happened with the Terra implosion last month. The MicroStrategy CEO also talked about fear and ignorance among Bitcoin investors. Without a doubt, many Bitcoin investors still don't have adequate and extensive knowledge of the blockchain network and the technology behind it. To many investors, it's nothing but green and red candles and leverages. But Bitcoin is so much more than that. One need only listen to people like Michael Saylor and Charles Hoskinson to see just how much the world needs this technology. Here's Keiser's reaction to Saylor's statement about wildcat banks and the fear and ignorance in the market.
You've got these, what he called wildcat banks, these big platforms, and they're interrupting price discovery. And they're doing so in a way that's manipulative and fraudulent. And it's the perfect opportunity for the SEC to step in and enforce the rules. Well, the adoption is definitely tied to understanding Bitcoin. And we know that the more you learn about Bitcoin, the more of a maximalist you become. Nobody who learns about Bitcoin fails to become a maximalist. Only people who really don't take the time to learn about it are left in the camp of a no-coiner or a skeptic. But on this point, I think what he's missing is the global nature of Bitcoin. So in the US, which has the US dollar and it has a much different culture and the financial markets are in a much different place, this is a bigger problem to get through to people who are bombarded with so many things happening in the financial space and the way that that's changing. I look at how, for example, gambling has become legalized with platforms now that we didn't really have even a few years ago. But if you look around the world, in places like El Salvador, the global South, places like Africa, the need for Bitcoin is so great that the learning curve is very fast. They just get it. There's a need for it. And that's where you're going to see the growth pump. Bitcoin is really very much going to be the global South making a move on the global North. You're going to see the changing of the guard. The central banks, the Federal Reserve Bank and the Bank of England, European Central Bank are going to be usurped. They're going to be overtaken by this Bitcoin revolution. And it's going to come from these other countries. It's not going to be led by the United States.
Max Keiser and Michael Saylor are both Bitcoin maxis. Yet, it is understandable that they both have different opinions about these valid issues. Saylor runs a public company and is bound by and familiar with certain rules that are not yet of paramount importance in the crypto industry. On the other hand, Keiser has been in the cryptocurrency industry for longer and is not bound by those rules, which explains why. Unlike Saylor, he is more opposed to regulation. What do you think about Max Keiser's interview? Please drop your comments and observations below and ensure you hit the like button. Thanks for watching.